On the week, the Dow outperformed, which is relatively unusual. The Nasdaq broke even and small caps faltered. However, this week the energy sector had a 19-day streak in which no member of the index traded above its 50-day moving average. This is the second longest span since the late 1950s with data compiled by Sentimen Trader. This hasn't happened since the summer of 2001 when Enron and its subsequent bankruptcy was pressuring the energy complex. Spoiler alert, this is a clue to investors that the energy sector may be a place for some bargains, so do some research. Since most of us have been living under a rock, you may not be aware that the University of Michigan Consumer Sentiment Report shows that confidence among the actual consumers has been collapsing in July and August to a 10-year low. So, in case you've wondered what's been driving stocks up, well, it's quite simple. So, let's take a look. So you ask, what's been driving stocks up? Well, $30 trillion of global central bank liquidity, which has risen $10 trillion alone since the March 2020 lows. That's what. This is why the stock charts and even George look so boring. But let's take a look at the charts anyway. And we're now taking a look at a 1-year daily chart on the Spider's S&P 500, and the symbol is SPY. And the close on Friday was 445.92. So all that money, global central banks pouring money into the system, ends up in the stock market. And this is what you get, a very boring chart. Bottom line running up through like that, and then the top line running up through like that. Very boring, but boring is profitable. Let's move on down. Not going to see much there with volume. And here we have the MAC. Again, since this November low, it's been above that zero line for the most part, with the exception of this right here. But being above that zero line means that the stock market is going to continue on up. And we're still here with a level of 3.4 on the fast line. So I think it's going to continue on and continue to be boring. You see the same thing here in the histogram, as well as the price rate of change. Now, we've all seen this before, but what else can I do? Moving into the relative strength index, we're climbing a little bit. We're at a moderate 72.18. That's decent. So we're not overbought yet. Once we get up to that level of 80 or so, that might be overbought. But we're not there yet. So just keep watching. Looks nice here in the stochastics. We're topping out here, so maybe we're going to have a little bit of a downturn coming next week or the week after. We'll pay attention to that. And then down in the Williams, pretty much the same thing. Back up here to the price chart. One last look. Well, it is boring, but at the same time, the picture is pretty. And for today, that's ChewDog Charts. Thank you.